So we should be able to see a screen here. It just says the future of options trading. Perfect. All right, so let's dive into this. So the thing about trading is great is that especially is that a lot of you guys that are on here. In fact, let me do a quick poll while we're sitting here because I'm always curious about this. How long have you been trading options? And so what I'm going to have two questions here, and it's going to be less than 1 year. And I'm going to put this as a poll here, and this just kind of helps to give me a sense of kind of where you are on your journey. More than 1 year. And let's just add a third choice, more than 10 years for the veterans. And then what this does is it just lets us know kind of where you are in the journey. You know, how long you've been doing this. Are you just starting off? Is this something that's new to you? Or is this been something that you've been doing a while? And what's fascinating is that when I talk to traders who have been doing this, let's just say for less than a year, the questions and the concerns are completely different than somebody who's been doing it for more than 10 years. We'll talk a little bit about that, but I think it's just kind of a fascinating kind of a thing. And all right, we've got 1,000 responses already. In fact, I'm going to bring the poll up here so you guys can see it live unfolding. And so we've got about 1,000 responses. And at that point, I guess this polling works because at that point, it doesn't really change. And so you'll see here, and I'll post this, about 47% of you guys have been trading for more than a year. And then it's about equally split between 23% that have been trading for less than a year and then 30% more than 10 years. So we do have a number of veterans here as well. All right, so let me just post this. And I think this is great just because it gives me an idea of kind of where you are in your trading journey. And then, it also kind of gives you guys, if you have been doing this for less than a year, well, guess what? 23% of the people have been doing this for less than a year. Okay. And if you've been doing it for more than 10 years, 30% of the people in here have been doing it for more than 10 years. And so, you're not the only one. Sometimes trading is a very solitary sport. And it's always nice just to you can see who's out there and stuff like that as well. Okay, so let's take a look at this. So we've had some amazing markets this year. It's complete and utter insanity. I always kind of halfway joke that this is my first pandemic. And it's really just kind of understanding what's going, not really what's going on with the markets, because I think that to the extent that we spend time trying to figure out what the market should be doing, that's almost kind of wasting energy from just kind of following the price action and utilizing tools to extract money from the markets. And it's that fine line, because we don't want to get too we don't want to impose our will too strongly on the markets, but we want to recognize, things when it's like too extended. We want to recognize when the odds of, say, a pullback are high, but we also don't want to fight the tape if this thing is just going to keep on going. And so the question is this something that we need to be prepared for in 2021 as well? Well, the biggest thing that's driving the markets this year, and this is something that really no one in our lifetime has experienced, maybe in 1999, but the amount of new accounts coming into the market is unprecedented, to the point where retail trading is actually having a noticeable impact on the markets. In 1919, I was thinking of the Spanish flu. In 2019, last year, it was the algos and the computers and the high frequency traders driving a lot of the action, and retail just kind of participated. Well, this year, retail is such a force that it's actually moving markets. And I would make an argument that one of the greatest transfers of wealth from, rich hedge funds to retail traders has been in the rise of Tesla. Now, it did pull back today, but keep in mind, this thing has gone from about 300 to over 3,000. And most of the time, the hedge funds have been short this, and the retail traders have been long. And, money has been flowing out of hedge funds into the retail traders' pockets. They're an opposing force on the market. But with all these new traders, we've also seen some new challenges and new things like that we got to keep in mind. And what's interesting here is that the platform that has the most new accounts also has the highest number of complaints with the FTC. Robinhood by far has the most complaints with the FTC, and a couple of other ones as well. But it's important to realize that we want to understand how to have an edge in 2021. How are we going to be able to do this for a living? If we got to make sure that we're just going to have the right tools, is basically what that comes down to. Now, this year, for those of you that have been following me, that this year has been, personally, my best trading year ever. This was an account that I started with 1.3 million, and their year to date, there's 16 million in profits, and I've wired, about $11 million out, just because, it's just like, let's go do something else with it. And then I did put 200K in TastyWorks, and that's at 1.5 million. And, again, this is from a dollar perspective and a percent return perspective. It's been my best year ever. Now, it doesn't mean that's going to happen next year at all, of course. But as we get to the end of this year, what I'm planning is, how can I give myself the best advantage for next year as well? I'm not knocking anyone, but I was in one of the biggest trades of my life. And while this platform went down for 2 days, that was quite frustrating. And I really don't want to be in a situation like that again in 2021. So the future of trading. Remember, trading is a zero-sum game, and to an extent. If the market's rising, a lot of people are making money, but there's a lot of times people on the other side of that trade as well. But especially in futures, if you're making money, it's because someone else is losing money. So the thing to think about there is, why wouldn't you want the best edge that you can give yourself? This is the time of year to make plans for 2021. What's your trading plan? What has worked well this year? What hasn't worked well this year? Okay, and just kind of really be honest with yourself. What are your strengths? What are your weaknesses? Not only from a personal perspective, but also from the tools that you're using. And what I have found that in general is, the key is edge, edge, edge. And all edges is the idea that you have kind of tools and tactics that identify that one outcome is more likely than another outcome. And that could be based on statistical edge. That could be based on math. That could be based on a chart setup that's proven itself over time. And that could be based on actually having a platform that's light on your resources and doesn't go down. All those things quantify an edge. And if you can get those three things, you've got a triple threat. So as you're going into 2021, why drive a Hyundai when you can drive a Tesla? So my platform journey is that I started off on, well, first I think it was Merrill Lynch Online with my dad. My dad was my broker, and he got me in, I think, charging me $100 a round turn to trade options. I think he got me into trading so he could pay the mortgage. But then I switched to E-Trade, and in the 1990s, and that's kind of when I really didn't know what I was doing. I was learning the ropes, I was figuring out the markets, and more importantly, I was figuring out how I behaved as a trader. How did I react under pressure? What was a position size where I could take enough risk for it to be worthwhile, but not enough that I lost my mind and did stupid things? And that's kind of the, a trader's journey there. In the late 1990s, I graduated to a platform called TradeStation, and I still use them today, mostly for charting. But at this point, I was mostly trading futures, and my options experience was, if I think it's going to go up, I'm going to buy a call. And if I think it's going to go down, I'm going to buy a put on equities. And then I started kind of selling some premium. And in 2006, a more experienced trading friend just said, hey, why aren't you trading options? Why are you trading options on TradeStation? You should be on Thinkorswim. I was like, okay, I've heard of Thinkorswim. How different could that be? So I checked it out, I downloaded it, and I was blown away. I actually didn't know at that time that there were tools available like that for an options trader. It was so much easier to use. And so I split up my accounts. I'd trade futures at TradeStation. I put all my options trading at Thinkorswim. And it really upped my education in terms of being able to, like a butterfly. I'd never done that before. Or, iron condors and all these things where I could actually analyze the risk. And it really opened up a lot of possibilities for me. So during this time, I had a website, and I was kind of doing the speaker circuit at the trade shows. And Tom and I ended up on the same panel at an industry conference, and we hit it off. It's like, wow, I was like, this guy actually understands traders. And I'd never met someone who worked at a brokerage, or in this case, founded a brokerage, that actually fully was dialed in to what traders needed, the tools that were useful, and that was great. And over the years, we put together some indicators. We put them on the Thinkorswim platform, and all was well in the world for a few years. And then a particular thing happened. On January 2009, TD Ameritrade bought Thinkorswim, and then and Tom, I don't know exactly the timeline on this, but after about a year of conference calls, Tom decided, you know what, I think I'm going to leave corporate America and go do trader education. And he launched a company called TastyTrade. And this was like 9 years ago, and I was over up in Chicago when we would go on the show, and I loved what he was doing and fully embraced. It's like, wow, this is a guy, he started this awesome platform. It got bought out. I totally get the idea that he, probably didn't like sitting in this, being a part of this huge corporate environment, had that entrepreneurial spirit, and now is doing TastyTrade. And that was awesome. And it was fun supporting him in that. And then after a few years of that, I think his non-compete probably expired about the time they launched Doe, which was a platform. And I was like, okay, that looks interesting. But at the time, I still like the platforms that I had. But then the real platform launched, TastyWorks. And I was like, wow. I went up there, took a look at it, and here you had something on modern technology. The same stuff, the same pipes that the high frequency traders are using, something that didn't take up a lot of resources, something that TradeStation could never replicate because they were so tied into the, old technology. And so I was excited about this. I love the functionality. I grew up as a retail trader, which means I need to look at charts. And so I kept asking Tom, I was like, look, your charts, you guys don't pay attention to your charts. I know you got the math and the quantitative stuff down. I get it. And I know that stuff is, really, really important, but I need charts. That's how I grew up. And so we'll talk more about that shortly, but because I'm kind of excited about some of the stuff that Tasty is doing now. But what I'd like to do, and Tom, I'll just kind of hand this over to you. And, I think what would be cool is, I know a lot of people here already know kind of who you are. But I think it'd be cool just to, I always say, like, hey, talk about what you want to talk about. But I think, just a little bit about, where I always think your take on the markets is interesting, but also any kind of new cool features on the platform, what you're looking at over the next year in terms of, what they're going to be doing. And, and we'll just kind of take it from there.
Sure.
And I
sure.
do know
that's cool.
From Canada would love to know when they could use TastyWorks in Canada.
Can you hear me, John? Can you hear me fine?
Yeah.
So, sure, and I'll get into a little Canadian discussion, but I don't want to start off as a little bit of a downer. So let me go. Thank you so much for the crazy nice, kind words and ridiculously nice introduction. I am not worthy, as they say. Anyway, and thanks everybody. It's a huge crowd on tonight. 2,200 people. It's just awesome. So I can't wait to do this this seminar with John. It's been, oh man, it's probably been a couple of years since we did something together, John, and it's awesome. I just seeing John's track record for the past year, I've made a quick decision that I'm going to give all my money to him to manage, because you're obviously way better at this game than I am. Yeah, I wish I could say that. I wish I could say that I knocked it out of the park like you did, but I didn't. It's been a crazy trading year. I've traded more than I ever have, but it's really interesting what's happening in the markets, and it's just I think the fact that we're getting together again after doing things together so many times over the last 2 decades, it's crazy fun. And I do remember the first time I met John Carter. We were doing a joint seminar in the New York City at the Traders Expo in New York City, and we got on stage together. And the game plan was we were both going to live trade. And I remember it was like either there was, I don't think the market ticked about 5 cents in a half hour. We just kind of looked at each other like, well, if there's no volatility, there's nothing we can do. We can't make something happen out of nothing. So we talked about markets, and it was fun, and it's been a great relationship ever since. And I think we should tell everybody that John's also an early investor in TastyTrade, and even though we haven't officially kind of christened our relationship until now. We've been doing a bunch of stuff over the years, but it's been small. I think that, you know, John's been with us since the very start of Dough and Tasty, and so it's great to be kind of, you know, your primary platform going forward. And to everybody that's on tonight, I mean, I'm going to keep this as simple as possible. Also, just so you know, Scott Sheridan and a couple of members of his team from the TastyWorks trade desk are on tonight, and they'll answer any questions so that John or I don't have to, you know, read all the chats or do things like that. So you can ask them anything you want. So if you want to ask questions about Canada, if you want to ask questions about the platform, about functionality, everything else, just fire away. You know, do anything you want. Hey, John, I think a point that you brought up to start off with is really interesting to me, and I'm going to start kind of in that direction. Just to confirm, do you see just my platform in the background right now? Because I can't tell what you guys are seeing.
Yeah, there you go. If you just minimize so now we can see your platform.
Beautiful. Okay, I'm sorry about that. This is my first time with my new hands, and this is my first time with John's technology. So sorry about that. But
it makes it way more fun and interesting.
You should be able to see the TastyWorks platform now, right in front of you, right?
Yep.
Perfect. So just a quick little follow-up to something you said earlier, John. You talked about the explosion in the retail side of the business, and I want to talk about that because you and I have been going back for almost 2 decades now, talking about there's going to be a massive transition from passive trading to active trading. And what we didn't know was what was going to be the trigger point, what was going to be the event that actually triggered, you know, this crazy movement of people going from just letting other people manage their money and starting to actively actively participate, to engage, to play a role in managing their own capital. And I mean, obviously at the time, nobody knew it was going to be a biological pandemic, but that's what it turned out to be. It turned out to be a trigger point and an event that kind of opened the floodgates. And that's why so many customers, you know, obviously went to Robinhood, to other trading firms, actually all around the globe. The world of finance has exploded. Now, the funny thing about that is, this is not like 1999 where you're going to get a day trading phenomenon. This is what's going to happen for the next 5, 10, 15, 20 years. The movement from passive to active has started. The transition and the flow of people to start managing their own money, just like booking their own airplane tickets, just like pumping their own gas, just like everything that we do for ourselves right now that we used to not do for ourselves. Everything's changing, and it's going to go in this direction. And there's going to be a mass flood. What's so exciting about it is that in the process of that happening, people are going to gravitate to become much more strategic, and they are also going to gravitate towards being much more capital efficient. When John and I first got in this, I've been in this business now for going on 4 decades, and as a market maker for 2 decades, 1 decade building, you know, Thinkorswim, and 1 decade building Tasty Trade and TastyWorks. And what's so interesting is not only have we witnessed this transition, but we've also witnessed a change in capital efficiency and a change in price. Just to give you an example, what used to be, you know, just from a product side, this is kind of like a real, you know, simple example, but I'll just, since John mentioned Tesla before, let's talk Tesla for a second. Tesla is a 600, close today at 604, after hours trading 591. Let's just say it's $600 stock. 100 shares of a $600 stock is $60,000. If you fully margin it, it's $30,000. But 100 shares of a $60 stock, of a $600 stock, is $60,000. What that does is, when you have an average account size of between, let's just say, between $25,000 and $50,000 for retail customers, and for retail trading, what it does is it means, okay, I can buy 100 shares of Tesla and I'm done. That doesn't work. That doesn't make any sense in 2020 or 2021, what we're about to get into. So the concept, and this stock just split 4 for 1. So the concept of stocks that the concept of stocks, or 5 for 1, the concept of stocks that are super expensive, that are not capital efficient for retail investors, that's going to change. So what you saw before, like, and one of the cool things about TastyWorks is we are product indifferent and we are strategically indifferent, which means this platform was built, John mentioned it quickly, but this platform was built on high frequency middleware. It's the only platform of its kind. It's lightning fast. It's like 25 milliseconds from the time you know, to push a button to get filled. It's 20 to 40 times faster than all of our competitors and all the competing platforms out there. In addition to that, it's built without a frame of knowledge or reference with respect to product or strategy or size. So you can do anything you want to do regardless of the type of account you have and regardless of the amount of capital you have. So for example, there's not different levels. So if you want to trade a naked option in an IRA, go ahead. If you want to trade a futures option in an IRA, go ahead. If you want to trade a complex option strategy, as long as you have the capital to do it, go right ahead. It's super cool in that regard, and it's indifferent to recognized strategies. I'm going to show you all this in a second. So if you were to go out, just as an example, and you wanted to buy, and the platform is so, it's not bloated at all, which means it has an incredible amount of speed, stability, and functionality, but it's all right in front of you all the time. We don't get fancy here. We don't get bloated. We don't get fancy. So if you wanted to buy, for example, let's say, you know, 100 shares of Tesla. In this case, I have it defaulting to 500. But if you wanted to buy 100 shares of Tesla, that's all you do is just click on the offer. If you want to sell Tesla, just click on the bid. That's it. Now, to buy 100 shares of Tesla, like I said before, that is $60,000 with no margin borrowing from us, or $30,000 if you're borrowing money. And it's expensive to borrow money, and it's expensive to trade stock. So people that are going to trade Tesla are going to think about this differently. So let's say, for example, let's look at all the different things we can do. So if I open up January options in Tesla, just thinking about this a little differently, just showing you some of the things about the platform. Let's say, for example, you wanted to get long Tesla, down $45 today, down another $10 or $13 overnight. Let's say tomorrow you come in, you're like, you know what? I think I kind of want to get long Tesla. But rather than spend $60,000 to buy 100 shares, let's just say you went out and sold one of the 500 puts. Now, I'm going to just put one. Oops, let me just do this 1 second. Let me do the 500 puts, and let me just do a one lot. So let's say instead I want to sell one put. So what's the difference between one put is long delta? One put is the theoretical equivalent of short one put is the theoretical equivalent of being long stock. But let's think about it. Why would somebody do that? Why would somebody use an option and go $100 out of the money almost? But why would you use the option as opposed to just buying the stock? Wouldn't you get a lot more bang for the buck buying the stock? And the answer is short, but you got to put up $60,000. Let's say you sold a 500 put and you collected, I don't know, tomorrow morning you might collect over 30 bucks for it, but let's just say the put is around $30. And let's say in an effort to sell one put, you have to put up a little under 20% of the strike price. So in this case, the strike price is the 500 strike. So you're going to put up right around, okay, a little less than 10 grand. It's probably around 8 grand total because of the credit you receive and everything else. So you're probably going to put up around 8 grand. And the first thing is you put up 60 grand to buy 100 shares of stock. You put up 8 grand to sell one put. So all of a sudden, okay, well, that's a lot more capital efficient for any size account. But also in addition to that, if you sell this put right here, you can see John talked about us being very quantitative in our nature, very quantitative in our research, and very quantitative in our software development. So this put right here has we call it a POP. That is a probability of profit. So it's a probability of profit of 68%. That is purely theoretical based on this bid ask and based on these actual prices. Since Tesla traded 71 million shares, it's what we call an efficient liquid underlying. That means this expected move is very accurate. That means the chances of getting down to this 500 level by January expiration give it about a 68 or 69% probability of profit. We also show you here something called P50, which is the probability of making 50%. So if you're collecting almost $30 on this put, and remember, you're collecting $30, and this is just a one lot, and you're putting up about $8,000 to do it. Not only is that a decent return on capital, but your probability based on pure theoretical Monte Carlo simulation is of making about $15, which is the probability of making 50% of this trade, is 81%. So all of a sudden, as opposed to buying stock outright, which I mentioned earlier is very capital inefficient, by using the derivatives marketplace, you're setting yourself up for a 68% purely theoretical probability of profit by selling those puts, and an 81% of making 50% of the premium in those options. That is super cool on its own. But what's really neat about the TastyWorks platform, and this is why John loves our technology, and this is why we've been working together for so long. Let's just say, you know what? He's bolder than, this is the share equivalent of 25 shares. See the delta over here? This column's delta. That means if you sell these puts, you're long the theoretical equivalent of 25 shares. And what's interesting about that, you can also see the delta down here of 25 shares. You can also see the daily decay of $80 a day. But when you have a 25 delta option, that's the theoretical equivalent of being long 25 shares. Let's say John is more bold than that, and he goes, you know what? I don't want 25 shares, the theoretical equivalent. I want 35 shares, and I'm willing to collect, I'd rather collect $45 instead of $30. You just drag it up. Notice how I didn't have to type in anything. I just drag the strike. So if I want to collect more, I just drag it up. If I want a higher probability of profit, I just take the puts lower. These are both long plays. It's still the exact same trade. I didn't have to type in anything. But let's say, okay, I'll stop here at the 520 strike just for the sake of argument. But let's say, you know what? I want to reduce my capital requirement even more. I'm going to just click on the offer of the 500 puts, and I'm going to do a $20 wide put spread here, and I'm going to collect about 1/3 the width of the strikes, about $7. And instead of putting up $8,000 for the naked put or $60,000 for 100 shares of stock, now I'm only going to put up the difference between the width of the strikes, which is $20, plus the $7 I'm going to collect. So or $7.15 that I'm going to collect by selling this put spread. So I'm only going to put up $1,285. That is the amount of risk on this trade. So I went from getting long Tesla by buying 100 shares of stock and putting up 60,000 to getting long Tesla, the equivalent of 25 shares of it, by putting up 8,000, to getting long Tesla by selling a put spread by only putting up $1,285. That's what we call capital efficiency. But let's say you have a small account and $1,285 is still statistically too much of a percentage of your small account. So what you do is you just drag this put up. You don't have to type in anything, and you make it a $5 wide put spread. You collect $2 in credit, and you only have to put up $300, and now you're long Tesla. So do you want to know why some firms have had, and ourselves included, have had massive growth in 2020? Is because people are recognizing the capital efficiency of strategic trading. It is completely different than the stuff we used to do before. And the beauty of this platform, again, I just took you from a $60,000 trade to a $8,000 trade to a $1,300 trade to a $300 trade, and I didn't type in a single thing. And now what's super cool about this is, let's just say I leave this trade the way it is, and I say, you know what? I'm going to sell that. I'm going to sell that put spread, but also just to even maybe reduce my risk a little and not put up any additional capital, I'm going to sell a really far out of the money call spread, turn it into a skewed iron condor. And again, I'm not typing in anything. I'm just clicking on bids and offers on this platform and adjusting it till I get to a credit. Instead of $2 credit, I'm going to lower these a little bit so I can get to maybe something that's closer to, let's say, here. Now I'm collecting a $5 credit because I made a wider call spread. I'm just doing things so I get to a certain credit, which means I can either be more capital efficient and put up less money, or I can mess around with both sides and sell a near to the at the money put spread and a far out of the money call spread. Now, what's really cool about this is, let's just say you don't want to do it in Tesla because you're thinking to yourself, well, that's kind of cool, but you know what? I'm a John Carter fan. John Carter follows everything. John Carter doesn't trade just, Tesla. He trades lots of commodities and futures and stuff all over the place. So let's just say, you know what? I think we're going to go and take a look at, just for the hell of it, we're going to look at soybeans. And because John and I have had soybean discussions before in the past. Soybeans are up 6 cents tonight. But notice the layout is exactly the same. And so when you come to this and you open up January, which has 44 days to go, and you said you wanted to sell a naked put in soybeans because you're bullish, you just do the same thing and click on the put. You want to turn it into a call spread, you just do this. Anybody on the platform can trade, futures options, equity options, ETF, index options, or any strategy you want. Let's say you wanted to sell, for example, you wanted to sell more of the bigger put, or you wanted to buy and make it into a back spread and buy more of the cheaper put. You can do those too. You can adjust all those strikes. Let's say you wanted to, let me go back, and let's say you said, you know what, I'm going to go look at a stock like IBM just for the hell of it. It's $126, and I want to do an opening trade in here. And I want to show you a couple things about the platform that are neat. On a stock like IBM, where you see the gold line in the middle of the page, that's where the current stock's trading. Where you see the first dotted line, that's a 1 standard deviation move below, and this dotted line is a 1 standard deviation move above. This is a 2 standard deviation move. The 1 standard deviation move means there's about a 16% chance of getting to this level. The 2 standard deviation move means there's about a 5% chance of getting to this level. And that gives you some kind of quality perspective on what's happening. So if I wanted to sell, for example, a 1 standard deviation strangle, the platform kind of already sets it up and shows you that. Well, what's so interesting about a 1 standard deviation strangle? And what's interesting is if you look at January here, 37 days to go to expiration, based on the current implied volatility where my cursor is, the expected move between now and January expiration is $6.41. That is a theoretically perfect number. It's also going to mean that 68% of the time, it's going to be right at that $6.41 or inside of that 68% of the time. That gives you context. And then if you set up a strategy like this where you're selling a put, selling a call, you can do it 100 different ways. You can buy a put, buy a call, do whatever you want. Well, one of the cool things about this platform is if you're visual, it also gives you what we call a curve mode. So it gives you a way to look at this position and to see it in a visual sense inside of a distribution curve, inside of where this 1 standard deviation move is. So if you're an engineer, or you're a quant, or you're a mathematician, or you're somebody that just got forced into studying statistics in college or whatever it is, now you can see this in a visual layout. You can see it in a charting layout if you want. You can see it in an active trader mode. You can see it in a pairs mode if you're pairing it up with something else, or you can see it in a classic table mode, which I did the first time, which is just this. And if you wanted to buy an out of the money call here, now you have a Jade Lizard. If you wanted to buy an out of the money put here, now you have an Iron Condor. I haven't clicked on anything. If you want to skew the Iron Condor and make it more bullish, more bearish, you keep the tighter call spread and the further away put spread. If you want to skew it and make it more bullish, you drag these strikes up. It's a piece of cake. And it's the same for options on ETFs, options on indexes, options on futures, or anything like that. We've also worked closely with John before we did this discussion tonight, this seminar, this whatever you want to call it, and this webinar. And we have embedded inside the platform all of John's proprietary indicators. So if you are a subscriber and you are part of the community, you have access to all of the proprietary indicators. And there's a few that are left that are on our next charting release. And so we have 2 new charting platforms, and all of that stuff that John has requested, we've either built or we're in the process of releasing. Now I'm going to give you one last really cool feature and then bring John back. On next week, we are, for the first time in the entire industry, we are launching something called order chains. And John, I think you're going to love this, because if you put a position on, let's say, let me go back to Tesla for a second, because John has been buying a lot of calls in Tesla this year. And let's say John goes out and you're following him. I'm going to clear this. and you're following John, and let's say he goes out and buys a 650 call tomorrow morning on a down opening, just as an example. What you're going to be able to do on the TastyWorks platform, and no other platform in the world has this, starting next week, you will be able to track this trade no matter what you do to this trade going forward, no matter how you tweak it, no matter how you adjust it, no matter what you add to it. You are going to be able to track this trade for up to a year if you keep this trade on until you close it, and then you can also follow it as a separate trade. But you're going to be able to track this trade. Let me give you an example. So let's say John goes out and buys these 650 calls at $60 or whatever it is, and the stock goes up a little bit, and he says, you know what? Now I'm going to sell the 670 calls. 3 days later. Doesn't have to be the same day. It could be 3 days later. So instead of selling and taking a profit on the 650 calls, he sells the 670 calls and spreads it off, so it becomes something like a riskless trade or a very low risk trade. Now the platform, because of this new feature called order chains, is going to track this trade. And let's say John likes this trade, but now he says, you know what? I'm going to ratio spread this, so I'm going to sell another call above. It will then track all three of these trades, whatever day they're made on, for up to 1 year, going back or forward, depending on when you open that trade. And it will look at these trades, and it will track these, and it will track the P&L. So now, if you decide, hey, you know what, this is really kind of cool, but I'm getting burnt because the stock's going up too much, so I'm going to sell a put against it, it will track that as well. Even if you do this put 2 weeks later, and it will pair this trade together and tag these and track all these positions together, and it will track the open, and it will track the real P&L, open and closed, for as long as you keep that position on until you liquidate that position. We call that order chains. It's a piece of technology we've been working on for years. It's the first platform in the world to have this. It'll be launched next week. And so you'll all have access to it. It's something, everything on this platform is completely free. So, I mean, there's commissions on option trades. Stock trades are free. There's commissions on futures trades, but we cap everything at $10. So we're the only platform that does that as well. So the platform is inexpensive. It is super fast. It is incredibly stable. You know, this is a year John talked about, you know, some platforms being down. This week, actually, a couple of major platforms were down on Monday, and Tasty has barely had a minute of downtime in 3.5 years. We've built the fastest, most stable platform with the coolest technology, and we're about to add order chains to it, in addition to all of John's proprietary stuff. All right, John, I've talked too long. Come on back.
that was awesome, Tom. I mean, so what was cool is like I think it was before you guys even released this, I was in your office in Chicago, and you showed me you're sliding everything around. I was like, oh my God, this is going to be amazing. I remember that. And I was super excited about it.
Yeah, well, we got you to buy into the company before you opened an account with us. We got you to buy into the company, so we loved that about you. You know, the fun thing is we've really built some cool stuff together over the years, and you know, I mean, I wish I've always wanted to, you know, to work even closer with you guys. It's just, you know, life's weird, man. Life's weird.
No, it was strange because I think we were like locked and loaded at Thinkorswim, and then, you know, all that, and then, you know, your company got bought. And then, you know,
yeah, I know, and that wasn't our fault. We were a public company, and we had multiple companies bidding for us, and so, you know, we basically lost control, and it happens. And you know, I mean, but I feel like really good about what we've built over the last 10 years. You know, at Tasty, this coming May will be our 10-year anniversary, and we've created some amazing content, and we've built some amazing technology, and we've really revolutionized the industry, you know, content-wise and technology-wise. So it's awesome to have you on board.
Yeah, no, I mean, it's like I've got some other stuff to cover here too, but I think it's just one of those things where, you know, and that's just kind of like, you know, it's like trading in life. It's kind of like you have a plan and then it changes, but then you make the most of it. And what's been cool about this is watching you guys take what you learned at, you know, building Thinkorswim from the ground up, where you're sitting around, you know, watching your first client, you know, on a bar stool, seeing what they're going to do, to, okay, now if we had to do it again, how would we do it? And the fact that you guys, instead of just saying, hey, you sold the company, I think, as I recall, you guys actually voted against selling the company, but you were outvoted. So it's like,
You are
okay,
correct.
well, let's try it again. And if we're going to do it again, let's do it right. And so I love that kind of stuff. So I think it's just been fun
Well,
watching
the
it
the
too.
reason the reason we did it, John, was because when we started Tasty, we wanted to just create all new content for that. We didn't like financial news. We wanted to change the world of financial driven content. The problem with it was at the time that we needed to control the technology and the fee structure. You know, the reason there's zero fees today, I mean, outside of an app like Robinhood or something like that, but the reason that there's zero fees is because we went to zero as soon as we launched TastyWorks. So we could reduce the average trade commission when we built Thinkorswim was between $10 and $12. We eventually got it down to just under $10. The average trade commission today on TastyWorks is $2.50. So we've reduced the cost of making a trade by 75%. And at $2.50, you can virtually do anything. And you can trade. There's no such thing as over trading. And it's like, okay, well, we've solved the commission problem. And so that's the coolest thing. And you build cool technology, and it really changes the way people interact with their money. I mean, it's capital efficiency at its best.
Well, and I think you guys disrupted an industry. Well, I mean, I know you guys did, but where I think it used to be, I mean, and these numbers, I don't know how accurate they are because it's off the top of my head, but I think it was something like, there may have been something like $12 billion in commission fees that, after you guys did your commission structure and people started to follow, that dropped to like 6 billion. It was something like insane where like the cost of trading is just, it's just getting destroyed. It's destruction in a good way because it's now anything is possible. You don't have to sit there and think, well, God, if I do that, I'm gonna, my commissions are going to be 10% of my overall net liquidity, and that's not efficient, and that's just not a factor anymore.
Yeah, it's what's happened over the years has been. I mean, I can tell you horror stories when I first started, but I don't want to go back into the age when dinosaurs, roamed the earth. So I just think it's super cool what we can build today, and it's super efficient for people to trade. And I just think you owe it to yourself if you're going to spend a lot of money, learning, and you're going to spend a lot of time and personal resources challenging yourself. I consider the world of trading an intense intellectual challenge, not because it's ridiculously hard, maybe more sometimes because it's ridiculously frustrating, but because it's so efficient and because it's so random. You called it a zero-sum game. We don't call it a zero-sum game, but we have our own terms for it. But we call it like we call the opportunity is based off of mechanical edge. And the way we look at the trading world, it's just the challenge is intense and it's totally engaging. And we look at it as something that, you have the opportunity to increase your processing speed of your brain and the speed at which you make decisions. And it gives you a huge edge over all of your competitors in every kind of business that you're in. So I find self-directed investing and trading just ridiculously cool. And I think it's going to the strategic side to it's going to expand, expand, expand.
Yeah, and it's just a lot of fun. And I think, well, so here's the cool thing, and so some of the stuff we've kind of already talked. So let me fly through these really quick. So what I want to get to with this is that, and I've been waiting like, patiently, I think for 10 years for these for Tasty and these guys to do this. So what we want to talk about is, 2020 has been an anomaly, right? But 2021, who knows what's going to happen. But if we've got kind of, I always say if you have the right tools and you have the right edge, your probability of being able to kind of generate I don't like to say consistent income because that implies that every trade's a winner, and it's not. But over the month or over a quarter, can you extract money from the markets? And that's why we're here, right? And so to do that, you need three things. First, you need reliable chart setups, and Tom and I playfully probably disagree on that, but I'll say that you need reliable chart setups that pinpoint high probability moments in time of one thing happening versus another, i.e., when this happens, 75% of the time, markets move higher. Now, I will say, and we're going to get to this, that to increase your odds even further, if you can apply the math and quantitative edges to the structure of your position when you get the right signal, I mean, here, okay, so let's say you got a signal that has a 75% probability of going up when it fires, and then you combine that with a probability of profit trade of 80%. Well, I don't know what 75% plus 80% is, but it's high. So all of a sudden, you're actually getting an incredible edge when you're doing this, and I'll show you some examples of that. So second, to increase that edge even more, you need an option strategy that has a built-in edge. Okay, so if you get the buy signal here, but you're buying an out of the money call that expires in 3 days because you don't know any better, well, you're kind of screwed. And that's when you can be right in the direction and still lose money. But if you get a buy signal that's technical, but you also apply an option strategy that actually has a quantitative edge, your overall edge increases exponentially. Okay, now I'm the first one to say that I'm an aggressive trader. So I do like to sit there and say, you know what, if I believe in this, I'm going to load up on some in the money, say Delta 70 calls, but I actually like to construct a trade that's theta positive. So it means I've got to build a lot of stuff around that. All right, so we'll talk about that. But the key here is once you have the technical signal, how do you then figure out the best mathematical probability of profit on the move? All right, and the cool thing about TastyWorks is that there's no other platform where this is easier. And I'll show you a few examples of that. Third, to increase your edge even more, you have a robust platform that stays up, is light on your computer resources, and enhances your ability to place and understand more complex option strategies. Okay, so that's what we're talking about. So what we need for 2021, if you guys are serious about trading and you want to end the year on a positive note, you've got to have chart setups with a defined edge, option strategies with a defined edge, and a trading platform with a defined edge. Again, I go back to why drive a Hyundai when you can drive a Tesla. So what I'm really excited about, and I can't emphasize enough, how long Tom and I have been talking about this, and I get it. And with Tasties, they've had their dev team they're working like madmen to get all the stuff that they want to get done. And charting for them up to this point has been a little bit on the back burner because they've got a lot of other awesome tools that they're working on. And so, about once a quarter, I'll text Tom. I'm like, hey, can you guys put the squeeze on yet? He's like, not yet. Okay. 6 months later, can you guys put it on yet? Not yet. But they finally got to the point where they've got all the stuff that they in queue, and I appreciate too how long tech development takes. Just from being at Simpler now and growing Simpler over the last five years or so. So, but now we're at a point where that's all changed, and literally it's perfect timing for 2021. So now, for free, these are all things that are free on TastyWorks at this point in time. Now, what's not shown here, just because I forgot to add it on my screen, is the squeeze. Okay, so the squeeze is kind of my signature tool that I like. I'll talk about what that is. So these now, if you log in to TastyWorks, all these are free and you can add them on your platform. Okay, so that's fantastic. But what's even better, and I know this is always that fine line, because I know, Simpler Trading, we're here as a community, we want to help people, but we have to charge money for things in order to do things like meet payroll, right? Meet office rent. I mean, that's just kind of how it works. But we do have premium tools as well, and I think that the premium tools pay for themselves 100 times over. But the premium tools that we've also added on here, now they're not on, but you get them, and then there'll be permission for you. Couple of things on this. First of all, good news. If you already own them, like say you bought them for Thinkorswim and you decide to open up an account tonight, we are not a-holes. We are not going to charge you for that, okay? We want this to be a pleasant experience for you. If you already own the indicators and they're premium indicators on here, just, we're not going to be jerks and charge you for that. You will just set them up for you, okay? But the premium tools that we have are the 10x bars, the early in and out pro, the RAF pro, the squeeze pro, and the squeeze signals. And I'm going to talk about those real quick, because if you're not familiar with those, these are game changers. Okay, so if you bring up, let's look at Tesla. If you're looking at Tesla, this is a normal 30-minute chart. It's like, oh, okay, there's an uptrend. Now, if you're a new trader, a lot of times what'll happen is something like, wow, this looks good, it's going up, I think I'll buy it. I'm going to buy a call option here out of the money that expires in 3 days, and then Tesla trades sideways to down and you lose money, and you're like, wow, trading sucks. And then there it goes again. It's like, okay, I'm gonna get it now. It looks good, and I'm gonna buy some out of the money calls that expire in 3 days, and it's like, wow, trading sucks. Okay, so what we want to be able to do is have actionable signals that give us an edge as to when is a good time to actually get into this. And Tesla's a good example because this is just an abnormal stock. There's only a handful of stocks that have the type of action that a Tesla does each year. So the first tool that I like to add on this is the squeeze. Now, I don't have, this is not a class on what the squeeze is or anything like that. Here's the short version. The squeeze identifies high probability moments in time, okay? HIPMITs, where if you guys are familiar with options trading, you know there's this concept called an expected move. And option markets are very efficient about pricing in what I call the expected move. If there's no squeeze, if I'm gonna do a trade, I'm gonna take into account the expected move. And that means that if the expected move over the course of 2 weeks is $25, like on Tesla, that might be over the course of a week. Well, I'm going to assume that it's going to stay in that range. I'm going to take advantage of option strategies that would benefit from staying in that range. Okay, here's the thing. Statistically, 68% of the time, a stock is going to stay within its expected move. What that means is that there is 32% of the time when a stock goes outside of the expected move. So why is this so critical? The squeeze identifies high probability moments in time where a stock is more likely to have a greater than expected move, okay? And that's a huge, huge, huge thing. And this means that when you have something like this, you can buy in the money, at the money. You can even buy out of the money options. And I know Tom has never done that in his life, but if you ever are going to do that, for the love of God, please do that when there's a squeeze, because it will actually give you a potential edge that a greater than expected move can happen. And so what I've noticed in this type of a situation is that if you have a greater than expected move and all the math is set up for the expected moves and it blows through that, there's a lot of people scrambling, right? If you're short the options, you got to buy it back. And if you're buying back that short option, guess what? It's going to drive the stock up even more. So I love these things for that. And so I'm always on the, is there a squeeze? Is there a squeeze? And the short version is that the squeeze essentially measures a contraction in volatility. And when you get the green dot here and the histogram's above zero, it's a release of all the energy that's been built up during that. And that is what results in the greater than expected move, okay? So that's how that works. And that's on a 30-minute chart. Here's you can do this on a daily chart, a 30-minute chart, a weekly chart. The key with the signal is once you get the first green dot, the signal lasts 8 to 10 bars, okay? So on a daily chart, that's 8 to 10 days. On the weekly chart, that's 8 to 10 weeks. So if you're gonna buy a call on the weekly chart, make sure that you're buying something like 90 days out, okay? So you can participate in the entirety of the move. And of course, a 30-minute chart would be 8 to 10 30-minute bars, which is 4 to 5 hours. So that's more of a day trade. You can do it on a 1-minute chart. Honestly, I don't waste my time on that. I want to, is the juice worth the squeeze? I don't want to scalp. I'm too old to scalp. When I was in my 20s and I was drinking 3 espressos a day, yeah, I was scalping. I got kids, I have goats. I can't do that anymore. So I am 30 minutes, and 30 minutes is the lowest time frame I will take a trade on. Right. So that's the squeeze. So from there, what I like, it's called the 10x bars. And the 10x bars help you manage a trade once you're in it. So if you get into squeeze here and the 10x bars go green, that means that the momentum is in your favor. Now, if you get dots, that means the volume is 50% above average. And when you get in that situation, you hold on. Okay, you strap in. That's where you make the most of your money. If you get green, again, obviously this is long, it's the opposite for short, but if you're up and you get green dots, just hold on. The biggest thing a trader has an issue with, especially if they're newer, because the market is a harsh mistress, is that they get into a trade and it's like, wow, I'm up $1,000, and then it comes all the way down and stops them out. So the next time they're up a little bit, they decide to take the profit. Because guess what? The last time they didn't take the profit, the market beat them down. This eliminates that. Just hold on, okay? And if you see it go back to red, now that was a weird candle right there, but if it goes back to red, get out. If it turns to yellow, that's neutral. But when you get this on the long side, just hold on. And it's vice versa. We haven't had a lot of down moves, but when you have red with dots to the downside, it's the same thing. What's beautiful about this is that it helps you hold on to the move as long as it's going to happen. And the most money you're ever going to make trading, okay? Now let me preface this. The most consistent you are going to be is that when you are theta positive. And that means when you're selling spreads, et cetera, et cetera. But the most money you're going to make is if you got an opportunity for a greater than expected move, you buy some calls and you hold on to the calls. Manage the trade helps me in the market than it's willing to give me. But at the same time, I'm not going to get out too soon simply because I can't manage my own anxiety, right? All right, so the other premium tool I have is called the RAF Pro. This is a great oscillator. I generally hate oscillators. This is the only oscillator I've learned to like. It was developed by a guy named David Starr. He's 1,000 times smarter than I am in terms of this kind of stuff. But what we're looking for here is a ready. The ready just says, you know what? This thing has come down far enough and it's actually ready to turn. And then when you get the arrow, it's ready to turn. You combine that with the squeeze, you get an exponential chance of a greater than expected move, okay? It's also a good exit strategy as well. You know, if you get an aim and a down arrow, it's like, okay, you know what? This thing is done. Let's get out. So these are some of the tools on here. Another one is called the Squeeze Pro entry tool. And this comes with the Squeeze Pro, but basically it said, hey, there's a squeeze here. The biggest question, obviously this market's been up, so we've been focusing on up examples. I'm a closet bear. I love shorting, but at the same time, I don't like pain. So I have signals here, so it takes away my inclination to short because I'm like, oh, this can't go up anymore. But I'm like, if there's a squeeze and I'm getting ready buy arrows and these are buy arrows, and even though Tesla's at $590, I guess this thing's going to keep on going for a little bit longer. So I am just going to acquiesce to that and I'm going to follow along. And same thing here. I mean, we had a squeeze here, sell arrows, and Tesla had a little bit of a pullback today. I'm actually really curious to see where Tesla ends the week. I mean, obviously it's a stock I like to trade, and I know at some point, this is something that the bubble could end very badly, but it's wanting to base that off of price action and not trying to, quote unquote, predict that. And then another tool on here that's really cool, it's called Early and Out Pro. Now you'll see that sometimes a squeeze will be setting up. Here's the thing you don't know. You don't know if the squeeze is going to last 5 dots and then go, or is it going to be 25 dots and then go? Because the really thing that's important here is the options you're going to buy. So this happens to be a daily chart. And if I'm looking at this and I buy some calls that expire in 10 days, but it stays in a squeeze for 20 days, I'm kind of screwed because, believe it or not, when it's a squeeze, that's going to be the quietest time of the stock. It needs to fire and release that energy. Well, when there's these green dots here, it's saying, hey, you know what? The train's about to leave the station. So if you have not established your position, you need to do it now. And so I like that because it's kind of like, hey, the squeeze is, fixing the fire. You need to get on this train. And I found that very useful as well. Okay. So throwing all that together, so my favorite strategy here is to, first of all, identify a setup that has a high probability of a greater than expected move. Now, in this case, let's just assume it's bullish. It's, of course, just the opposite if it's bearish. What I'm looking for is a squeeze pro with a buy signal. Remember, the buy signal is those little arrows that appear on the chart. If the early in and out is green, that means it's about to fire. And if there's the RAF ready aim up arrow, that's when you have that. Just here's the point. This doesn't happen very much, but when it does happen, the odds of a greater than expected move are very high. And again, it's just the opposite for a down move, the squeeze pro with a sell signal, the ready aim down arrow, et cetera, et cetera. So I'm agnostic in terms of direction. I mean, down markets are more fun, but because they're faster, but when you're fighting an up market, it's the most frustrating thing in the world. So in general, what I like to do is buy a delta 70 call. So let's say that I buy 10 delta 70 calls, but I also am very, very cognizant of the whole concept of premium erosion. And it drives me insane because if you're sitting there waiting for it to fire along, every day you're going to lose money in theta decay. So what I like to do is then utilize, this is why I love the TastyWorks platform, is you could just sit there and say, you know what? I want to establish a position that has a statistical 75% probability of profit. Well, if I buy the delta 70 calls, okay, that's not going to get me there, but then I could sell some put credit spreads around it. So what I'll do is I'll buy the delta 70 calls, and then I'll sell at the money and out of the money put credit spreads. And then on strength, I might sell delta 20 calls that have a shorter expiration and leg into a diagonal. Okay. And what's great about this is I can do all this, as Tom was showing you guys, I can do all this and just say, you know what? All right, I like Apple here. Let's say that I want to short a put vertical because I'm bullish on it, right? And I want to do this. I want to get my probability here on the P50 over 70%. So I can just kind of come down just a little bit and or there we go. And then you just kind of mess around with it. And if I can, short put vertical. Yeah. So I'm going to keep that one here. So let's say, what are we at? We're at Apple 121. So I want to come down here. Let's try the 120. So if I do 120, that's kind of at the money. I'd like to get to 80%. So if I drop it to 119, that gets me to 78%, 118. And you can kind of see what happens there. And so what will happen is that you can just kind of play around with this until you get to 80%. It's like, okay, great. The 118, 113 gives me a 73 cent credit and gives me an 80% probability of profit, right? And then from there, maybe I want to buy, an in the money call, and on something like that, you can come over and structure it. So what I like about this though is that you're just moving stuff around and until you get what you want. So that's the beauty of this platform. So not only is it lightning fast and it doesn't go down, but you can actually, I think you have an edge and be able to construct things that even if you're newer to trading, like, and I get it, if you're brand new and it's like delta, what? Premium decay, what? You don't have to know or understand any of the complicated quantitative stuff if you understand that a probability of profit of 80% is a good thing. And you can just move things around and have no clue what you're doing. But once you get to that 80%, it's just like, okay, God, that's 72. Okay, now it's 79. Man, I don't know what the hell I'm doing. Oh, it's 84. That's a good thing. Okay, and that's what I love about this, because you don't have to understand why that's good. It's just the platform's telling you statistically that is really, really a good idea. Okay, but when you combine that with a chart that gives you these signals, right, all of a sudden this is a game changer. And I can't tell you how happy I am to see this, because for so long, I looked at tasty charts like this, and I was just like, kill me. I can't do anything with this. I mean, again, I'm a retail trader. I was nursed on charts, and so I can't eradicate that from my system. But when I look at when it has the tools on there, it's very exciting for me. Okay, so this is an example of a Tesla trade I had on back in August, and you can see that on this case I had a what did I have here? I had a So I had a couple different things. Now this was pre-split. So I had the 1700, 1800 call debit spread that expired in 4 days. And it looks like I had a diagonal. Yeah, so I had the 1550, 2050 diagonal. And you can see here that, of course, the out of the money calls had an 89% probability of profit. And then I kind of like to keep things above 50%. I'm actually okay with 50%. On the one hand, it's like, well, John, isn't that a coin toss? But if you've got an indicator that's saying, you know what, this is probably going to go up, then I'm totally fine with that. So anyway, I like to combine, the idea of like some chart setups that I understand and I can be patient and I can wait for the setups with the quantitative edge that you can get from TastyWorks that frankly you really can't get from other platforms. I mean, I haven't seen it this easy and this laid out. So that's kind of it. And we'll stick around here and answer questions, but I want to show you guys how to do this. So remember, for 2021, our goal as traders is, of course, to generate a consistent income with the least amount of stress as possible. It doesn't certainly mean in any way, shape, or form that the market's going to go your way every time, right? There's going to be days when it's just like you're going to get kicked into the teeth. But if you understand position size, if you understand the amount of risk you're willing to take on a trade or on a week, then if you have chart setups with a defined edge, option strategies with a defined edge, i.e. that high probability of profit, but then a trading platform with a defined edge, like something that doesn't go down, something that's light on your resources, something that can allow you to structure trades very easily, on pipes that high frequency traders use. But then there's a last edge here, and that's to keep costs as low as possible. And this really is the ultimate quadruple threat. So we talked a little bit about commissions, but let me show you this. In this year, at least on TOS, I've spent $225,000 on commissions. Now, if you think of that, it's like, well, John, you made a lot of money on it. I'm like, okay, I'm not knocking that, but I could buy 100 ounces of gold, okay, and still have about $40,000 left over. Okay, so guess what? I calculated what my commissions would have been on TastyWorks, and they would have been about $40,000, actually less than that. But the point is, had I done all my trading on TastyWorks, I could have wired funds out and bought 100 ounces of gold and let that sit on my desk. That's real money, okay? And it is a cost, and it's prohibitive sometimes. And I've noticed it this year because, again, this year, I have not traded the size before that I've traded this year. I had one trade on, so my most expensive trade is I had a 500 lot call debit spread before the split on Tesla. And after the split, it was a 700 lot call debit spread. After the split, it was a 3,500 contract spread. And when I went to close it out, it was more than my mortgage. So that's a real cost. So what I like about, in addition to all the advanced technical tools that Tasty has, so now you're gonna see this right first and go, wait a minute, that doesn't seem that cheap, but just hold on. So it's $1 to get in, basically less than 10 contracts, nothing to get out. So there's no reason to leave a short contract on. Get those short contracts off the books by expiration, even if it's worthless. After hours on a Friday, news can happen and you can get assigned. There's no reason to do that, right? Options on futures, 0 to get out, okay? Options on micro futures, 0 to get out. I don't know if Tom mentioned this, but they're going to have crypto coming pretty soon. You can trade Bitcoin futures as well. And then there's futures, et cetera, et cetera. Here's the thing, though, capped commissions. Basically, they're going to limit any opening equity option trades to $10 per leg. Okay, that's huge. So what does that mean if you're trading, say, 100 lots at a time? So on 100 lots, if you do, say you buy 100 calls or 100 puts, that means you're buying 100 and selling 100. That's 200 total. On TastyWorks, it's $30, and you can see it's about $100 more on the other platforms. If you do 100 verticals, i.e. a call debit spread, and it's going to be, 200 in, 200 out, 400 total, $60 on Tasty. And then let's say you do an iron condor. Okay, it's 400 in, 400 out, $120 on Tasty. This adds up. It's a real cost. Okay, this is money that's coming out of your right out of your pockets. Most people don't realize it because it's not a cost that they see. But imagine if that instead of commissions being deducted from your account, you received a bill every month. And it's like, oh my God, I've got to write a check for $10,000. It's real money, okay? And it's so important to understand that. So again, another edge there. So here's the thing with 2021, if you've got the things that we talked about here, if you've got edge, and in this case, we're talking about edge across multiple ideas, okay? You have edge with chart setups that have been proven to work. You've got edge with option structure, okay, that's proven to work. And with this platform, you can get your pop on and get it going that way. And then you have a platform that's light on resources and doesn't go down, right? Little things like that. And then the commissions are extremely low cost, okay? Like, I get it, Robinhood has free stock trades too, but do you really want to construct a complex option strategy on Robinhood? Okay, I love what they've done to the industry. They've made it easy, but frankly, Robinhood is, it's your beginner's platform. Okay, you got to, at some point, you graduate. But the idea, what I like to look at as a trader's journey, is your only journey. Okay, it's not to be right. It's not to predict the markets. It's to create an equity curve, that goes from the lower left of your screen to the upper right, and that's it. So if you look at your equity curve from Jan 1 to December 31st, of course, there's going to be, blips, but in general, is it generally ascending? And that should be, in my opinion, every trader's goal for 2021. Okay. And to do that, you've got to have Edge. All right. So if you guys are looking at this and you're like, you know what? I didn't even know TastyWorks existed. I want to share with you something that I think is really cool. So we talked about some cool indicators. In our store, we have, all kinds of cool tools. If you elect to open an account with TastyWorks tonight and you don't have a TastyWorks account, and by the way, we'll cover you if you do as well, we're going to give you a $500 coupon to our store. So even though there are some indicators that are already free on the platform, we have some premium tools, and we'd like you to be able to use this coupon to apply towards those premium tools if they caught your interest. Okay, so here's 2 key links. First of all, so we can track it, we would ask that if you are going to open up a TastyWorks account, and you've probably already been to their website during this presentation, shut that down and go to our link, simplertrading.com/TastyWorks, because we can track it and say, oh my gosh, you did open an account. You are eligible for that $500 credit, okay? Now, this is kind of diving into the weeds. Once you open the account, we also need proof that you funded it, okay? And that's just, and again, it's just to like, hey, if you're gonna do this, let's do this. So once you fund it, then great. You can go to simplertrading.com/rebate and let us know and submit the proof that you have it's very easy to do. I know I wish there was an easier way to do it, but in terms of getting this $500 credit and getting you set up for 2021, so it's going to be a successful year, it's worth the extra steps. All right. We will, let me I'll post these up here real quick because I know, okay. To sign up for TastyWorks account, go to simplertrading.com/TastyWorks. All right, there you go. That's the key one. Now, here's the good news. Again, we like to make this as easy as possible. Some of you, I know, already have a TastyWorks account, and you're already listening to Tom's show in the morning over at Tasty Trade, which, by the way, they have amazing education over there. Great. We're not going to be jerks about this. Just send us an email to support@simplertrading.com, and we will walk you through the process so you can also get that. Okay. Yeah, we got that. These are the tools. Again, if you're looking at this going like, wow, I really want to get those tools for Tasty, here's the link for that. And look, it's probably something that you might want to wait until you get the coupon, so there's no hurry. But that's the link you can go to actually sign up for the tools. If you're like, yeah, I want to get them now, I'll use the coupon for something else. And I'll put that up there as well. But most importantly, you can go through here, and I want to spend some time on some Q&A. So I'm going to fly through this real quick. These are the tools. You got the Ready, Aim, Fire. We already talked about that. I showed you why I thought it was important and how I use it. The Squeeze Pro indicator. This is kind of my bread and butter. No squeeze, no trade for me. Early in and out is very, very useful in terms of timing. And then the 10x bars are great because they let you know when there's a really special movement underway, when you get the momentum and the volume on your side. So the other cool thing about this too is that if you do want to get the tools, we are eligible now for what's called PayPal credit, which just means that you can get them with PayPal credit and you're not really charged anything for 6 months. Like 6 months later, you can pay it with no interest. I just thought that's cool because I get it. Yeah, there's going to be some people that have large accounts and this is not a big deal. But if you're just starting and you might be trading like a $5,000 account, it's that's some real money, and that's a way to kind of defer it and as much as you can. Okay. I think that's, yeah. So I'm just going to leave this here. So that's what we got. I will type in some of these links. I'm happy to hang around and answer questions. And then Tom, if there's anything else, you'd like to discuss, I just thought it was really cool that we got a chance to kind of talk about this. I know I've been super excited about actually having the tools on the platform and getting my own personal trading geared up for an awesome 2021 with you guys.
Yeah, I mean, I'm super excited. I think you did a great job, and I think you explained, listen, you explained everything. It was awesome.
Oh, easy enough, right? Well,
yeah,
one of these days,
easy enough.
Well, in one of these days, maybe, I don't know if it's going to be in 2021 or not, but it would be fun to actually, even do something like a live event where people can get out of their homes, hop on these things called airplanes and get out of their bubble. But in the meantime, we'll certainly be active online and doing what we can to help you guys.
Yeah, we're used to traveling, and I usually travel to 25 or 26 cities a year, and this year was like zero. So yeah, I mean, my system's going through, I'm reprogramming my whole system right now, so I'm not used to being home. So and we love coming down to Austin, so we will for sure be in your backyard. We may be doing it at your house, but we'll be in your backyard.
Yeah, no, that's awesome. Yeah, I would think too is that it's just with anything, with the nice thing. I mean, there's pros and cons of this year, right? And I think the cons are obvious. The pros are, I think things like Zoom meetings and not having to. I like flying and I like traveling, but maybe not having to do it super frequently, or who knows. But it's been like this has been a year of disruption, and there's always going to be positives and negatives of that. But I think the key is you embrace the positives. You kind of roll with the punches, and I think 2021 could be a pretty amazing year.
Well, there's definitely going to be a lot of things that we didn't. Well, I was doing a talk today. I was doing a podcast with Dylan Radigan, and we were doing the podcast. And one of the first things I said was, when the pandemic first broke, and it was really a new experience for us. I thought it was going to be a binary event, and I thought it was going to be something where it was going to have an end date. And now I look at the pandemic, and I think that there's a lot of things that have changed forever now. And some things will go back to the way they were, and some things will, obviously, they never will go back. But we will, because of how strong we are as just as a consumer, as a country, as an economy, we will come back, and we'll keep all the good stuff, and the bad stuff will go away. I think it'll be. I'm agreeing with you. I think you're going to see an explosion.
Well, it's interesting too, because I know it's easy to. I mean, and of course, there's a lot of kind of doom and gloom out there as well. But I was looking at something the other day, and and the Spanish flu happened between 1918 and 1920, and what happened after the 1920, or what happened then, was the Roaring Twenties. So what's kind of interesting is that, I mean, who knows what the next 10 years are going to look like? But I think the idea that I think the doom and gloom idea is a stretch. I mean, I think something like this, you have kind of creative destruction, and it opens up, huge new opportunities. And I think that's the thing to focus on.
Oh yeah, I mean, I think the opportunities going forward. I think you're going to see definitely some kind of a transfer of wealth. There's too high a concentration of wealth right now in certain stocks and in certain sectors, and I think you're going to see a little bit of a transition of that and transfer of some of that wealth, and it's going to be. But I don't think we've even scratched the surface for the next kind of flow of creative and innovative capital. So I think you're going to see some really amazing things happen. And I also think on the financial side, you're going to see a huge growth in alternative products, not just digital assets, but lots of alternative products and smaller products. Like, we launched the small exchange this year. You're going to see really cool products. There will be event-based products coming. There'll be lots of new stuff, and it's all going to be strategic. And 4 years from now, you might be buying S&Ps and trading an election, trading a political candidate or a sports team. So I think we've just scratched the surface of what we're going to see over the next couple of years.
I mean, how cool would that be to be able to trade presidential futures for the next election?
Well, there's actually no doubt in my mind that you will be able to, because the politics is too closely integrated now with the financial markets and the flow of news. And you basically, in order to make everything even more efficient, you just have to open it up to free markets. It's going to happen. There's no way that it doesn't happen. It's the next step.
Yeah, no, it'll be it's fascinating too. It's just the push towards everything more digital and everything more integrated. And and the nice thing about it, and I think it's important. I mean, it's kind of why my wife and I and kids, we live outside of Austin, kind of on a ranch, and that was a deliberate choice to unplug from time to time. So it's just there's some days where I mean during the week I'm wired into the matrix. I mean, I'm looking at the markets and all that kind of stuff. But on the weekends, it's like, what? I'm turning off my phone. I'm going to go see if I can catch the goat. But I do think it's important. Like, you got to get that balance. And Anyway,
Catch the
it'll be
goat?
fun.
What
2020
is?
will be fun. I'm excited to trade it, see what's going to happen next, and all that fun stuff.
Oh, I didn't understand that. What does catch the goat mean?
Yeah. So yesterday, we had so we're trying to learn to, we get horseback riding lessons like once a week, which ask me again
Oh,
in a couple of months how that's going. But one of the goats ran out in the field. It spooked the horse, and the horse kicked it. And then the horse, the goat went screaming off into the hills. So literally, we had to go catch the goat.
got it. Got it. I live in downtown Chicago, so I'm pretty free and clear of horses and goats, so I'm good.
Well, at some point, if you're bored, I mean, you can certainly come help us, catch the goat and see how that is.
Yeah, yeah, that's gonna be a tough one for me.
No worries. All right. All right, guys. Well, thanks, Tom, for joining us. I mean, it's been a little while, and it's fun. Not only it's always fun kind of touching base on what's going on, but yeah, I'm super excited about just kind of getting at least some of the tools that I like to use on the platform and, knocking it out in 2021.
Yeah, it's gonna be great. Thanks, John. Thanks everybody for hanging in there with us tonight. Thanks so much.
All right. Yep. Have a good night, everybody.